this recording was started a little late, but just be aware that there was another attempt you can see of trying to go long at once we touched the low of that daily first presented gap for July, and then right after that I switched short a little bit later than I would have liked to have went short, but targeting the sell stops inside that opening range gap from June 30th. So you can see, just waiting for price to spool down there. You can see that we're already 10 handles in profits, and so right here, there wasn't much time, I guess, of the recording in the trade because I started the recording a little late. But you can see after here, there it is. Yeah, so it's June 30th. You can see that after I closed the position, once we trade into the opening range gap, I actually try to go long. So I'm stalking a setup long. The reason, and I'll keep this short and simple, the reason why I accidentally setting a stop, but I actually did mean to, I meant to set a line there. Yeah, it was a line. I think that's what it's called. A horizontal ray, that's what it's called. So meant to set a horizontal ray. But anyways, back to what I was actually ended up looking for. So going on a 4-hour chart just to get that sell side, and just trying to get my focus back in the game. And so eventually I did start searching for the longs. And so why did I switch long bias right after we traded down into the opening range gap? Well, because how did I even get this opening range gap first? The way I got this opening range gap is by looking at the monthly chart, and so I saw that we were trading down into the previous month's candles. So the previous month candle, so I went to a 1 minute chart, and I went and measured all the gaps from that previous month, and this was one of the larger end of the opening range gaps in terms of handles. And so I knew it was going to be a salient point in price, and you can see that, with the benefit of hindsight, that there was a reversal at that point. So we respected the upper quadrant, and we traded from there higher. So right here I'm just kind of, I guess, gathering my bearings, I guess, just trying to see what's reasonable, what's not reasonable, what's expected and what's not expected. Now, with the benefit of hindsight, today was a very, very, very tough day for me. So I actually did draw down. Obviously would not have liked to, but it's an uncomfortable spot for me. And so, but it is expected after such a hot streak that I've been on. Drawdown is inevitable, but today I endured a little bit more than I would have liked to, and I guess the best thing I can do going forward is just stick to the plan. And even though I did not really, my bias was correct and my trade directions were all in line, but the price action was just a little, not choppy, but it was, I'm trying to think of the best word. It was tough. And so it was a little tough. And I think what really affected me was that I went on more of an emotional stake because I didn't want to end up in drawdown. So, I was uncomfortable with the idea of that even occurring. And so I tried to, I guess, push more than I should. Anyways, price is now trading higher on this recording, and what I was really looking at was that 15-second fair value gap, the first one to form after we had traded, but I missed the opportunity right as soon as I scrolled down on a 15 or 10-second chart, and it's trading down here, but I just didn't want to endure more risk. And so at this point I am in drawdown, so I think that this is really what affected me the most. So I guess after I ran up the equity curve so high, I just didn't want to see that risk, if that makes sense. I don't really know how to explain it, but there's a different mentality in drawdown, and I'm aware of that. And today I let it affect me, and I let it get to my trade. So, I'm being honest when I say that. There's no sugarcoating it. Is that I let it get to me, and because of that, my trade performance today was affected. So, the levels that I typically use any other day of the week, any other month, any other year, all remain the same. I was using the first presented gap on the 4-hour chart, the weekly first presented gap on a 1-minute chart, using the opening range gaps, using inversion levels, gaps. Everything still remains the same. The plan is still the same, but the fact that I was in a different state of mind because I was a drawdown, that is what majorly, does that make sense? That was what mostly affected, the trade performance. So you can see I'm drawing swing projections, trying to see where price is likely to draw to, and also trying to find reasonable points of entry, but it just started moving way too fast. So, I could worry about ifs, thens, and buts, like if I had gotten into that 15-second gap, but there was really no point in trying to rush it, I guess. At this point is what I'm thinking, but in the moment right here, I'm thinking to myself that, okay, this is a point of reversal, but I don't want to get in to a point where price can retrace down lower and run me for my stop. So I'm waiting, and you'll see in the next recording.